Hi, hello everyone. Welcome back to my channel. In this video, a problem is solved on preparation of a statement of income and expenditure and statement of assets and liabilities. Kindly watch the video till the end, like it, share and subscribe the channel. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. This is a problem on preparation of statement of income and expenditure and statement of assets and liabilities. The question is like this. The following, let me stretch this one here. The following is the trial balance as at 31/3/2018 of Messrs. Mallikarjun Company, a limited liability partnership. So let me insert the columns here. We need 4 columns. So serial number, then particulars, debit, credit. So 1, capital accounts. So wherein we have got Ganesh, then Vinayak. Ganesh 30,000, Vinayak 20,000. Then number 2, drawings, Ganesh, then Vinayak. Ganesh drawings amounted to rupees 10,000. Vinayak drawings are rupees 5,000 here. Then purchases and sales. Purchases and sales, which are given the problem as rupees 1 lakh, then 2 lakhs. Then next we have got opening stock. So which are given as rupees 50,000. Then next, wages, rupees 10,000. Salaries, rupees 10,000. Machinery, 30,000. Furniture, 20,000. Printing and stationery, which is given as rupees 5,000. Debtors and creditors, rupees 50,000. Then 60,000. then cash in hand rupees 20,000. The total of this will be 3,10,000. 3,10,000. Then there are adjustments here. Machinery is to be depreciated at 10% and furniture at 5%. Provision for doubtful debts at 5% on debtors. Salary outstanding rupees 5,000. Interest on capital is to be allowed at 5% per annum. Profit and losses are shared equally. Closing stock valued at rupees 30,000. Provide 30% tax on profit. Prepare the statement of income and expenditure and the statement of assets and liabilities as at 31/3/2018 of the above limited liability partnership. So this is a question here. Now let us have a discussion on this problem here. So the capital accounts, they will appear in the statement of assets and liabilities. Then the drawings will be deducted from the capitals. Purchases and sales, it will appear in the statement of income and expenditure. Opening stock is to be compared with the closing stock here. So closing stock is 30,000, whereas the opening stock is 50,000. So there is a decrease in the opening stock, which is to be deducted in the statement of income and expenditure. Then wages, it comes under personnel expenses, that is paid to the laborers. Then salaries, it will come under the head of personnel expenses. Then machinery, statement of assets and liabilities. Furniture, statement of assets and liabilities. Printing and stationery, administrative expenses. Debtors and creditors, it will come in statement of assets and liabilities. Cash in hand in statement of assets and liabilities. Then depreciation, statement of income and expenditure, and the same shall be deducted from the respective assets balance. RDD, it will come under other expenses, and the same shall be deducted from the debtors. Salary outstanding, it should be added to the salary under personal expenses, and the same shall appear as a liability in the statement of assets and liabilities under other liabilities head. Then interest on capital is to be debited to, it will appear in the statement of income and expenditure, and the same shall be added to the respective capital balances of the partners. Then profit and losses are shared equally here. Closing stock it is to be deducted from the opening stock, as opening stock value is greater here, and the same shall appear in the assets and liabilities. Provide 30% tax on profit, it should appear in the both statements. So now let us go for working out this problem here. So Mallikarjun LLP LLP's statement of income and expenditure for the year ending 31/3/2018. So let me insert here 4 columns. So particulars, rupees, rupees, rupees. So the second and third column are the inner columns here. Okay, let's start now. Incomes. So here sales. So which is given in the problem as rupees 2 lakhs. Directly we shall take it to the outer column as it is 2 lakhs here. Then from this let's go on deducting less expenses. So here we have got purchases. So purchases, let us take in the third column here as rupees 1 lakh. Then the next one here, decrease in stock, that is opening stock is given in the problem as rupees 50,000. So 50,000 minus rupees 30,000, so which will be 20,000 here. Then the next one here, personnel expenses. So here we have got wages, that is given as rupees 10,000. Then after that we have got the one more here, salaries. So here there is an outstanding salary. So salaries actually paid are rupees 10,000 plus outstanding rupees 5,000. So total salary will be rupees 15,000, which shall be taken to here 25,000. Then the next one here, administrative expenses. So under that we have got printing and stationery. Stationery we have got only one here. Let us record this here as rupees 5,000 here. So directly we shall take here as rupees 5,000. Then the next one here, after administrative expenses we have got a selling expenses. So in this problem we have not given any selling expenses related expenses related to selling like commission or advertisement etc., or say carriage on sales, etc. So we are not given, so let us not bother about that. Then depreciation, so we need to calculate on machinery. Machinery, it is given as a 10%, so 10% of rupees 30,000, so which comes to rupees 3,000. Then similarly on furniture, that is 5% of rupees 20,000, so it comes to rupees 1,000. So the total depreciation will be 4,000 here. Then after depreciation we have got a G, that is interest. So here under interest it is on capitals here, on capitals. So if there's any interest on loan, that will come here also. So interest, so we have got two partners, one is Mr. Ganesh, so his interest on capital, so it is given as the rate 5% here. So 5% of his capital balance, it is given in the problem as 30,000. So here Ganesh will get rupees 1,500 as interest on capital. Similarly, Vinayak, again 5% of rupees 20,000 is the capital balance, so he will get rupees 1,000. Then the total of the interest on capital will be 2,500. Then after this, H, other expenses. So under this we have got a RDD, so which is calculated at the rate of 5% as given the problem. 5% of the debtors, that is rupees 50,000. So this will be rupees 2,500. 2,500. The same it will come here also, rupees 2,500. So now we should take the sum of all this, that is 1 lakh to 20,000, 25,000, 5,000, 4,000, 2,500 and 2,500. So that comes to rupees, so 145, 150, 154, 154, so 1,59,000 here. $1,59,000. So the difference what we are going to get here, profit before tax, so which comes to rupees 41,000. Then from this we should deduct less, that is I, the continuation of the alphabet here, provision for tax, which is to be calculated at the rate of 30%. So 30%, let me put in the bracket here, so 30% of the available profit, so 41,000, so which comes to rupees 12,300. So which comes to 12,300. The same shall be subtracted in the outer column. So let me take here 12,300. So the difference is what we get here, profit after tax. This is, in short, it is called as a profit after tax. So the difference we are going to get here, it is 28,700. Then from this we should send less balance transfer to partners. So there are two partners, Ganesh. So their profit sharing ratio is equal here. So 1/2 multiplied by rupees 28,700. Then similarly Vinayak, same ratio, so 1/2 multiplied by rupees 28,700. So when we take here, it will be 14,350. So here also 14,350. The sum of this will be 28,700. 28,700. So the balance, if any is there, that will be transferred to reserve, general reserve here. So this is how we should prepare the statement of income and expenditure. Now the next one here, statement of assets and liabilities. So again, let me insert the same here. So it is 3 columns. Okay. So here particulars, rupees. So first let us start here with the A. Let me take in the capital letters, contribution and liabilities. Below that, number 1, sorry, below that so 1, that is partners contribution, partners contribution. It should be partners contribution. So first let's start with the Ganesh capital. So Ganesh capital, to this. So his share of capital is rupees 30,000. To this we should add interest on capital, so which is given as rupees 1,500. So then the next one we should add here, share of profit. So both the things we should add here, 1,500. Then his share of capital is of 14,350. So let me underline here so that it can be distinctively it can be shown here. Then the next one comes here. The sum of this will be 45,350. From this we should subtract less drawings. So the drawings which are given in the problem as rupees 10,000. So 10,000. So let us take his balance to the outer column, that is rupees 35,350. Then similarly we should go for Vinayak also. Vinayak's capital. So his capital balance is given as rupees 20,000. So let me underline here so that it can be distinctively shown here. So his capital balance here is 20,000. Then to this we should add interest on capital. Then similarly we should add his share of profit. So now let's go for his interest on capital will be rupees 1,000 and share of profit remains same 14,350. So when we take up the sum of, let me underline here so that it can be shown clearly. So the sum of this will be now 35,350. So 35,350. So from this now we should subtract less drawings. So his drawings are rupees 5,000 as it is given in the trial balance. So now let me underline here so that the difference we can take it to outer column here. So here 5,000, when we subtract here we are going to arrive here rupees 30,350. 30,350. Then the next one we should take here, number 2, liabilities. Here A. So here we have got a secured loans. So in this problem we don't have any secured loans. So next one here B, unsecured loans. Then even we don't have any unsecured loans. Then C, short-term borrowings. Even we don't have a short-term borrowings in the problem. Then we have trade payables. Yeah, there's a creditors which is given in the problem there. So that is given as rupees 60,000 here. Then the next one here we should take E, that is other liabilities. So other liabilities, under that we should take the outstanding salary. So outstanding salaries. So it should be taken as 5,000. So there is only one liability, so that's why directly I will take it to outer column here. Rupees 5,000. Then the next one here F. So under that we have provisions here. Under that it is provision for income tax, which we have computed in the statement of income and expenditure as rupees 12,300. So there is only one provision, so directly let me take it to the outer column. So 12,300. So the sum, I think I left one more here. Of course that is not there, but still then let me write here B. This is B, reserves and surplus. So in this problem nothing is there. In this problem there is no reserve. Just let me put a dash here. Then this is A. So when we should take the sum of this noun, so which comes to rupees 1,43,500. Now we should go for the assets here now. So this is the part A, assets and liabilities. Contribution liabilities. Then B, noun, assets. So now in that A fixed assets. So we have got a machinery here. So machinery rupees 30,000 minus depreciation rupees 3,000. So 3,000 it is, not 2,000, 3,000. So the difference we are going to arrive here rupees 27,000. Then we have got a furniture rupees 20,000 minus rupees 1,000 is depreciation. So which comes to rupees 19,000 here. So when we take the sum to the outer column here, it comes to rupees 46,000. Then the next one we should go here, B, investments. So there are no investments given in the problem. So let us just put a dash here. If there are there, then we should record there. Then C, we have got loans and advances. There are no such things here. So now let's take a D, that is inventories. Yeah, D is inventories. So inventory is nothing but here we have got a closing stock here. So closing stock. So as we have got only one item, just wait here. So closing stock which is given as rupees 30,000 here. So 30,000. Then the next one here, E, trade receivables. So in that we have got debtors, that is there, which is given the problem there. So debtors or bills, receivables, all they will come here only. So rupees 50,000 minus RDD, that is rupees 2,500. So the difference, let's take to the outer column here, 47,500. Then the next one here, F, cash and cash equivalents. Under that, equivalents. Cash equivalents. Cash in hand. So we have given as rupees 20,000 there. 20,000. So now the sum of this will be 1,43,500. So this is how we need to calculate here. So we started from here, that is a statement of income and expenditure account, right? This is the firm's name, Mallikarjun LLPs. Let me make this as a bold here. So here bold. So the sales here, incomes, if there are like other incomes, as it is not there in the problem, just let me write here other incomes. So in the problem we don't have other incomes here. So just let me put a dash here. So here the expenses were deducted here. Again, just let me take one tab here. The same thing, let me repeat here, to tax. So let me just make this bold here so that it can be distinctively seen here. So whatever the things will come here, that we should go on recording under each head, and we should go on calculating, and we should go on putting the amount in under this, so that we are going to arrive here. Other expenses, this is a profit before tax. So let me make this bold also here. Then when you calculate provision for tax, this is profit after tax we have got now. So this is also, let me make this as a bold here. So this is the balance which is remaining. Suppose if there is any balance is there which will be transferred to general reserve, again it should be statement of liabilities as on 31/3/2018 here. So just let me make this as also bold here so it can be clearly shown. So this is a contribution here. Then partners contribution we should calculate. Then the next head here is liabilities. Then here it is assets. So fixed assets. Then we have got investment here. If they are there, then we should go on recording here. Then interest, loans and advances. Then inventories. Then trade receivables here. Then cash and cash equivalents. So this is how it will come. So this is the total. Let me write here total. So here also let me make this as a bold here. Then this is also total of the liabilities. So let me make this also as a bold so that it can be done here. So this is how we need to calculate. Thank you.